Hello and welcome to Between the Lines, a podcast that delves into the stories shaping Asia Pacific's reinsurance landscape. Recorded here in the newsrooms of InsuranceAsia News in Hong Kong. I'm Mithun Varkey, Editor-in-Chief. And in this episode, we dive into Zurich's bid for Beazley, explore the aftermath of the Victorian bushfires, and assess the impact of other cat events in Australia and New Zealand. We'll also discuss the growing significance of data centers in the insurance market in Asia Pacific. And as always, we'll also bring you the stories that we're currently investigating. Our guest this week is Andrew Smith, co-founder and COO of Swiss Re-owned flood modeling specialist Fathom. Andrew will share insights on the challenges in closing the flood protection gap, particularly in light of the flooding events in China and South and Southeast Asia in 2025.
But really, the idea for the company Fathom came from our ties with the insurance market. So at the time, there were many big floods happening, actually principally in Asia, that kind of woke up the whole global insurance market to the fact that for most of the world, we didn't have coverage.
This episode, I'm joined by the entire IN editorial team. With me is Deputy Editor Andrew Mullen, Senior Correspondent Aidan Gregory, and reporters Joana, Nguyen and Roshan, Nambiar. Welcome, everyone.
Nice to have you back, Mithun.
Let's start with the story that's been shaking up global insurance markets. Zurich's $10 billion bid for specialty insurer Beazley. On Monday, Zurich revealed the Swiss carrier has made an enhanced offer for the Lloyd's specialty carrier after the Beazley board rejected multiple such offers in the past. Aidan, can you bring us up to speed on the developments surrounding this bid and what's next for both sides?
Sure. So, this is big news for the London market, and it will also, have knock-on consequences for Asia too, particularly Singapore. Zurich has finally decided after trying to woo Beazley's board for the best part of a year that they've gone public with this knockout bid for the company. It's a huge premium. It's a 56%. Premium to the closing price of Beazley shares on Friday, which was the last trading day before all of this was made public. It makes it quite. This bid is quite difficult for Beazley shareholders to ignore. I guess you could call it, a Godfather-like offer. It's one that's very hard to refuse. Whether they still hold out even longer for an even higher bid remains to be seen. But it's very clear that Zurich's very serious about buying the company. It reminds me a little bit of Aviva's takeover of Direct Line in December 2024, although Beazley's an altogether more exciting business than Direct Line was before it was swallowed up by Aviva. Zurich has been vocal for quite some time now about its ambitions to grow in specialty lines, and it also lacks a large Lloyd's platform. And by buying Beazley, it allows it to achieve both of those objectives in one fell swoop. Beazley's biggest lines are in property and specialty, but it also has a very fast-growing and profitable cyber insurance business, which has been very much at the core of the equity story in the last few years. So it's a very exciting prospect, and it's fairly clear the logic behind why Zurich is being very aggressive with its heavily sweetened offer.
Indeed, it does seem like a fairly generous valuation from Zurich, and it sort of chimes with Zurich's stated plans to build out its specialty lines businesses, and that's kind of what all the companies are doing at the moment. But Aidan, interestingly, you brought up the Direct Line deal. Can you tell me what the parallels are?
Yeah, it does remind me a little bit of that transaction because Aviva, in that deal, you also had a very motivated buyer, which had a very clear idea of what it wanted to do, and Aviva had to sweeten its offer before it was finally successful. With Aviva's final bid for Direct Line was done at a 73.3% premium, which is even higher than what Zurich is offering to pay for Beazley. It's pretty clear when you get into this kind of territory that you do force shareholders to engage, even if they have been sort of previously dismissive of the offer.
True. I was reading an analyst report which said the offer values Beazley at about 2.1 times net asset value FY25, which is a significant premium to the historic average M&A multiple in Lloyd's of about 1.7 times NAV. So it's certainly a great deal for Beazley shareholders. But then there are people who argue that Beazley is a stronger franchisee and has a very strong cyber portfolio, which means they probably are holding out for better offers. But what's clear is that we've been talking about this since last year. We're talking about acquisitions. We saw that at the 1/1 renewal, there's quite a lot of capital available. This capital could not be deployed, so we definitely see more deals in the coming days. And it certainly, the Zurich's offer is just a sign of things to come. So turning to recent cat events, Australia is grappling with deadly bushfires in Victoria, where flames have been raging for weeks and have already claimed at least one life. This event evokes memories of the Black Summer a few years ago and draws parallels with last year's LA wildfires. Andrew, what's the latest on the situation?
Thanks, Mithun. Yeah, you mentioned the wildfires, and I think it is remarkable there has only been one human fatality so far. I think testament to the people being prepared and the warnings that went out and the warning systems in place. But this event has been massive. It's around 4,200 hectares have been burnt, and there's been a lot of comparisons with this, and that's for us in our region, that's relatively 5 times the size of Singapore. There's also been 1,500 structures destroyed, including 435 homes. And on top of that, 38,000 livestock have been lost. There's a big farming community down there. And on top of that, there's actually been seven racehorses perished. There's a big farm stable down there, and one of the big trainers lost 7 of his horses who were down there resting. But interestingly, they did manage to rescue over 300. So they didn't do too bad getting the horses out there. The trainer is actually based in Hong Kong, David Hayes, and he had to rush back to help his sons with the defences and rescue the horses. So there's a loss there for the racing community, but I think they did quite well to get the majority of the horses out. Insurance Council of Australia have confirmed that there's been over 2,300 claims lodged across property, commercial and motor, and obviously this is going to continue to rise as this event is still ongoing now. A lot of these fires have been brought under control, and there's a lot less than there was, but there is fires still burning, and the impact's going to be felt for a while, and it's definitely something we're going to monitor in terms of the losses there and how much is this eventually going to cost.
True, it's just the start of the summer, and there's a couple of months to go. To be honest, the last couple of years have been fairly benign for Australia. We haven't seen major cat events. There have been few, of course. But one thing that's been a big concern for Australians have been the cost of insurance, rising premiums. And, we've seen, the sort of softening of the reinsurance markets seem to be helping that. But these events, we've seen the hailstorms end of last year. We've had this wildfire. And how do you think that'll impact the Australian insurance market? We've seen people like companies like Suncorp report that they've blown through their reinsurance cover. That remains a big concern. And there were also reports that a group of Queensland councils have approached Marsh to structure a mutual insurer to address the rising insurance rates. So how do you see that play out?
Yes, interesting that our attention was drawn to this story initially as the Insurance Council of Australia emailed us a transcript from their CEO, Andrew Hall. He'd given an interview to ABC radio, the national radio, on Tuesday this week. And they emailed us, we've clearly only part of the transcript because it was only 3 questions, but they clearly wanted to highlight this issue, and he'd spoken quite in depth about it. And basically he's expressed his disapproval of this proposal, which came from a group of Queensland councils. They're trying to create a not-for-profit mutual fund for regional residents and businesses which have been hit by premium increases. Andrew Hall expressed he understands the frustration of the local leaders, and but expressed concerns about a localized solution that has no diversified risk and is heavily financially exposed.
I think the insurance cost will remain a big concern for Australians, and especially as the sort of events that we've seen recently. I mean, apart from the hailstorm, we had a big cyclone early in the year. We had a flash flood, and that's going to continue to affect people and drive up insurance claims, which would see costs going up. And it's not just Australia. I mean, we've also had a few events in New Zealand over the weekend, especially heavy rainfall in Auckland. again, the Australian insurers are exposed to New Zealand claims as well. And again, the New Zealand events remind us of the twin events that happened a couple of years ago, the Auckland flooding. It was a big insured loss event. Do you have the numbers from the New Zealand event, Andrew?
So at this stage, they seem relatively small. IAG confirmed they received around 80 claims across home, contents, motor, boat and commercial policies following heavy rains in the Northland region of New Zealand. Further downpours are expected, so that those figures are expected to rise. Interestingly, New Zealand's Met Service predicted a month's rain would fall in 2 to 3 days in Northland. So that's a lot of rain into one area in such a short space of time. And yeah, it's another one we're going to have to keep monitoring because the claims are going to keep rising, and the impact of this event is going to continue.
Yeah, I think it's going to be a busy summer for insurers down under. Moving on, Roshan, you've been digging into the fast-growing data center sector across Asia Pacific, and data centers, as we know, is all that the industry is talking about these days, given the need for capacity to meet the hyperscale developments we're seeing around the region. What are the brokers and insurers telling you?
Yeah, like you said, it's been a very popular topic recently. So we're looking at, again, rapid data center growth across the Asia Pacific, which is driven by AI, increased cloud demand, and even some massive hyperscale investment. APAC now actually accounts for more than a third of the global data center capacity, and it's only going to continue to accelerate as we go forward. Allianz says that the region will see more than a 20% year growth through to 2028, with major build-outs underway in places like Malaysia, Indonesia, India, Vietnam, and Thailand. Singapore still remains a key hub, while China and Japan and India actually make up most of the installed capacity. But there are some challenges that are being faced. So there are rising asset values, power and cooling demands, and AI-dense compute clusters are creating new high-severity risks. Some of these mega campuses also needs billions in cover to push past traditional underwriting limits, especially in crowded markets like Singapore and Tokyo. Insurers are struggling somewhat to keep up with that fast, challenging technology, from the liquid cooling and battery systems, and even which leads to like a tighter underwriting, higher deductibles, and more emphasis on strong engineering. To bridge this gap, they've mainly said that they need alternative capital such as ILS funds or sovereign wealth investors and captives. And parametric solutions are also becoming quite popular, especially for flood, typhoons, and grid instability. What's very clear from what the information I received is that the data center boom isn't just reshaping the digital infrastructure, it's reshaping the insurance market and pushing it to evolve as fast as the technology it protects.
Thanks, Roshan. Yes, it is. It was, I think, renewable energy went through the similar cycle, but I think data centers are probably going to be much bigger for the region, the scale at which they're all building out. Thanks, Roshan. Joana, you've been following up on your scoop on Vietnam's new reinsurer, AlphaRe, which has just started operations, as we understand. You spoke with the team recently. Can you tell us about their strategy? How do they plan to position themselves in such a competitive market, and what their differentiator is?
Yeah, so this actually followed my previous exclusive report on AlphaRe 2 months ago. So back then, AlphaRe declined to give me comments about their launch. But I guess, after receiving necessary regulatory approval, they're more willing now to talk about their company. So I had an official interview with the CEO, Lê Hoài Nam, and he said that the company is founded by a group of stakeholders in the finance and banking sector in Vietnam, with EVF General Finance holding the largest stake, followed by VietFirst Securities and also other investors. So they have a charter capital of $19 million, and they are headquartered in the capital city of Hanoi. And currently, AlphaRe has 15 staff members, including 2 based in Singapore, in order to serve overseas clients. So in the first year of operation, AlphaRe will focus on domestic facultative reinsurance for large-scale projects, including renewable energy power plants. This is because, the other 2 Vietnamese reinsurers, Vina Re and Hanoi Re, have already deployed their maximum capacity into the market. And then at the same time, the percentage of local reinsurance section in Vietnam has been stalled at, 12, 13%. Meanwhile, offshore section increases year on year and is now at 33%. So this is particularly true for the fact market. And that's why they decided to focus on this segment in order, to help to retain more risks in Vietnam.
So, Joana, this is the third reinsurers enter Vietnam. Well, what's the reaction been in the market to their launch and their plans?
Right. So since last December, AlphaRe has started its nationwide pitching campaign to clients, and they actually started writing in the last 1/1 renewals. So the CEO told me that the company received lots of welcoming support from clients because, the demand for reinsurance is higher and higher, and clients want to have another source of reinsurance solutions to assist them. And moreover, with the RBC regime gradually coming into effect starting from 2028 in Vietnam, he said that the demand will be even, more. So this is a pretty favorable condition for them to enter the market at the moment.
It's always exciting to see new reinsurers set up, especially in Asia, where reinsurance isn't where the capital first flows to. So it shows you the sort of opportunities in the region. But great to see how AlphaRe sort of builds itself out in the coming years. We'll be keeping a close eye on them. Great. So now it's time for us to talk about what's coming up. Aidan, what's keeping you busy?
I'm working on a story about the outlook for the catastrophe bond market in 2026. So after a record 2025, the catastrophe bond market, is really in focus at the moment. And I'm looking into whether the momentum that we saw in 2025 can continue into 2026. And based on my conversations so far with various market practitioners, the consensus does seem to be that, this asset class has really grown up, and, the momentum is going to continue to be strong this year.
Certainly, that's an interesting angle. I mean, I think cat bonds are going to be a big topic coming year. I mean, towards the end of last year, we saw QBE issue a new bond with Australia and New Zealand quake events covered. There's also one from Inigo where that covers Australia quake events. So I guess Asia Pacific will see a lot of new issuances, and certainly what's to keep an eye out is for casualty sidecars, which is the latest thing in the block. And I mean, it's probably a while away before any Asian companies would want to do a casualty sidecar, but I guess it's quite interesting times for the ILS market in general. Thanks, Aidan. Joana, what about you? Any big stories in the pipeline?
I've always got big stories on the go. So recently I spoke to a financial lines broker, and she told me about the rise of parametric products in financial lines. So, why these parametric solutions are more established in the property catastrophe space, she's seeing growing interest in data-enhanced and quasi-parametric concepts within financial lines. And this is particularly evident in areas like cyber, BI linked to technology outages, and certain regulatory and operational triggers. So I'll be following up on this to see if other brokers also share the same viewpoints.
Certainly, I think, we've seen some cyber parametrics, and data centers obviously a perfect opportunity for parametrics. And I think Roshan's story already sort of mentioned the need for parametric products for the data center sector. Interesting. Great. Roshan, what are you tracking?
Keeping in line with parametrics, I've reached out to Celsius Pro, the parametric insurance specialist. I'm chasing their response, and hopefully something develops over the near future.
All right. And on my end, I mean, I have had a late start to the new year. I'm still catching up on what's happened at the renewals, and I'm trying to reach out to some of my contacts. I do have a few interviews lined up in the coming weeks. I'm really still doing my reporting, so I don't have stories that I'm chasing at the moment. There should be something in the works soon. Great. It's been a fantastic meeting, everyone. I think it's a wrap. I know you're all eyeing the clock and waiting for lunch, so I won't keep you any longer. Let's all get back. The guest for this episode of Between the Lines is Dr. Andy Smith, Chief Operating Officer and co-founder of Swiss Re-backed flood modeling specialist Fathom. Andy is the Chief Operating Officer at Fathom, as well as an active research scientist with a PhD in flood modeling. Andy talks to us about Fathom, Fathom's technology, and how it sort of differentiates itself as a flood modeler, as well as the emerging risk of flood as a peril, and how insurers, governments, and flood modelers can help close that penetration gap. Thank you, Andy. Thank you for joining us at Between the Lines. To start off, I'm interested, you, as the founder of Fathom, can you tell us a little bit about yourself and about Fathom, how it all started, and what's your mission?
Sure. Well, let me start by saying a big thank you guys for having me. It's great to be here. Really, I'm a scientist. That's where it all starts. I did a PhD many years ago now in this thing called computational flood modeling. And the PhD itself was focused on trying to couple flood models with climate models. But really, the idea for the company Fathom came from our ties with the insurance market. So at the time, there were many big floods happening, actually principally in Asia, that kind of woke up the whole global insurance market to the fact that for most of the world, we didn't have coverage. So the insurance market was underwriting risk around the world with very little knowledge, actually, of what flood risk looked like. So that was really the genesis for the company, and led myself and my co-founder, Chris Sampson, to start the company because we were building the first generation of these global flood models. And by global, what we really mean is, yes, they cover the whole globe, but the unique thing about them is that these models can be built in very data-poor parts of the world. So you don't need local information. So Fathom really attempts to build these models anywhere in the world. And we've gone from models that were actually truthfully pretty crude when we started the company, limited by available data sets, through to the kinds of models that we have now. And the models that we have now are truly a revolution in our ability. Just a few days ago, we launched a new terrain data set around the world called Fathom DEM. And in short, that is the world's best image, if you will, of what the Earth's surface looks like. When we combine that with all of the methods that we have here, Fathom builds these flood models now that are useful for insurers, governments, engineering companies, banks and asset managers, emergency responders. So although we started as, I guess, an insurtech company, actually we provide information now to a whole range of different organizations. And the company itself was acquired about 2 years ago by Swiss Re, one of the world's biggest reinsurance companies. And that really, for us, is another way to get our data into even more organizations' hands, because I really do feel like these models have the ability to really improve societal resilience to things like climate change.
Great, thank you. How is Fathom? I mean, you mentioned that it's a global model and it's not reliant on local data sets. How is Fathom's model different from some of the other other modelers out there in the world? How do you differentiate yourself?
It's a great question. I can focus on some of the technical things, but then I'll also mention what is one of the true USPs of what we do. So I would say the physics of our models are pretty unique. So how much of the computational algorithms are focused on representing the flow of water, for example. So the raw physics is unique. The input data sets that we use and our ability to process them are, I would argue, a massive USP. So I mentioned just now things like terrain data sets. So we have the world's best global terrain data set underpinning our models. We're the only organization, believe it or not, that represents river channels for the whole planet. So there are many model components that are unique. But actually, in terms of a company ethos, the thing that really, I would say, differentiates us is that we are the scientific leaders in this space. And when I say we're the scientific leaders, what I mean by that is that our models and our methods and our input data sets are peer-reviewed. So we publish this stuff in the world's best scientific journals. So I can also say that we are the science leaders in this space. That's important because not only should it endear faith in the methods that we apply, but hopefully it provides transparency as well around kind of how to appropriately use these kinds of data sets. That, I think, is also very important as we enter the world of non-stationarity. It's another way of saying kind of climate change. Like, how do you end users believe what we say with regards to the future, right? You don't have a time machine. So how do you have trust in organizations telling you about what risk is going to look like in 30 years? Well, I think the best way we do that is being completely transparent and letting our peers around the world validate the ways in which we build these models. So that is another, I think, and probably the core USP of our organization.
I mean, often when we speak to the industry, especially the insurers and reinsurers, I mean, there's no doubt we've seen a lot of flood events, and this flood as a peril is certainly becoming a bigger and bigger threat every year. I think we've seen that last year and the year before. Significant flood events, especially in Asia Pacific. Obviously, one of the things that people say about, in Asia, especially Southeast Asia and South Asia, that we've seen a lot of flood events. Insurers talk about lack of models, lack of data, and ability to sort of preempt some of these events. How do you see that challenge? How do you see solving that challenge in the region, especially given the sort of protection gap we have in these regions and the vulnerability to climate change we're seeing in some of these regions in Asia?
I think better models has to be a part of the solution, right? Better models enables insurers and reinsurers to better price risk, right? Which has to be a part of the solution. In the absence of good models, insurers will either not provide coverage or they'll be very cautious. So it should be an insurance enabler. Also, making organizations outside of insurers aware of the risks also has to be a big part of the solution, right? You need to make people aware of the risk they're exposed to. And that goes for the general public. It also goes for things like governmental organizations. Like, can we get some of these data in the hands of governmental organizations who in the past haven't had access to them? And so in a kind of an environment with a lack of knowledge, they're not empowered to take action, right? So I think what we're doing here at Fathom is clearly not the whole solution, but I think it's a big part of the solution. Let's get these models that now exist. They're brand new, right? So I often say you shouldn't overly criticize organizations for not being aware or taking action around these problems right now, because the science is so new. These models are so new. They really are kind of, for want of a better phrase, they're fresh off the conveyor belt, right? They're just being built. Nevertheless, they are now here. We have them. They do provide useful information. So let's get them in the hands of organizations and make society, particularly in Southeast Asia, more resilient. I mean, Southeast Asia, truthfully, if we look at our models at global scales and we look at things like our economic loss models, so the models that give us estimates of economic damage, actual damages experienced by floods, Southeast Asia is the most exposed part of the world. You have a lot of assets, a lot of urbanization, frankly, in harm's way. It's also a very, again, for want of a better phrase, a very wet part of the world, right? You have things like the Mekong Delta, right? A very flat, wet part of the world with lots of infrastructure in the way. So let's get these data in the hands of people and make that part of the world more resilient.
How do you see, I mean, we've had some really interesting events, I mean, for the want of another word, but really unprecedented sort of events around the world, and certainly so in Asia Pacific. I mean, there was I'd imagine a flash flood last week in Australia, which was, sort of nothing that I don't think that you could have modeled for it. The sort of events that we saw towards the end of the year in Thailand and then Indonesia and Sri Lanka, where we had those, the Senior and Ditwa and sort of all of these things coming together in ways that models probably have, there are no historic models to sort of predict that. How do you see finding modeling these kind of new events, unprecedented events, and how do you see the impact of that on the broader industry?
Yeah, it's difficult, right? Because we are escalating climate volatility is clearly happening, right? And actually the kind of, if you want to break it down to the physics of that, it's actually pretty straightforward. A warmer world, a warmer atmosphere holds more water, right? There's this very old physical law called the Clausius-Clapeyron law, and it dictates that, right? There's hotter air holds more water, so it will be a more volatile system. So we have a more volatile climate system. We also have models that, I guess, traditionally, lots of them have been based on observations, and that is a big problem, right? Because if you're building models based on observations of a system that's fundamentally changed, then it's no surprise that your predictions will be pretty hopeless, right? Because it's a new kind of system. Added to that, actually, I would say that even if the system was stationary, so if we kind of pretend that the climate is entirely stationary, the atmosphere itself is in mathematical terms, it's a non-linear system. And a non-linear system, it gives you chaos if you let it run long enough, right? It's the same reason why weather prediction is so difficult, right? Like if you move 5-10 days out, it gets really hard because the system is very, very volatile. My point here is that we've not been observing the climate system for very long, only a matter of kind of a few decades. And if you're talking about things like a 1 in 100 year event, well, we've not been observing the system for 100 years. So even if the system was stationary, using models based purely on observations would be a problem. So in answer to that, again, we need these models that have different ways of representing that uncertainty, right? We need different ways of representing climate uncertainty. We need different ways of filling in the gaps with our observations as well. That's exactly what we do at Fathom. Actually, I would also say that it's where the rest of the world can learn from insurance, because broadly speaking, this is what catastrophe models used by insurers and indeed reinsurers are designed to do, right? They're designed to give us an understanding of these big tail events. So when we're hearing about these unprecedented events that have never been seen before, well, that's exactly the kinds of events that generally exist. And yeah, we do get caught out as an industry, but those kinds of events are generally the kinds of events that are contained within the event sets used by insurance companies, right, to try and understand tail risk. So I do think these tools, originally designed to understand tail risk in the insurance market, actually, I think society at whole can use them and use them to understand some of these new risks that we're seeing.
Are there ways in modeling to sort of react to the climate change? I mean, we said it's been based on observation, and we haven't been observing for a long time. How do you account for these variables that climate change brings into your modeling process?
Another great question. The principal way to represent climate change explicitly is to use climate models, right? So you have models of the climate system, and models of the climate system attempt to simulate what could happen to the Earth's climate over time, right? And there are many of them, and there needs to be many of them because we need large ensembles given the uncertainties. But those models attempt to simulate, well, what does the climate look like if we perturb it in certain ways? And those perturbations generally take the form of inputting things like CO2, right? So you ramp up emissions and then you see what the climate system looks like. We can plug those models into our risk models, right? And our risk models will be things like the models of river systems around the world or the models of flash flood systems around the world. And then we can try to close that gap. Closing that gap is very difficult because one thing to emphasize is that climate models, they really don't represent the things that we care about as risk modelers because they operate on entirely different scales in space, different scales in time, right? So they don't represent kind of risky phenomenon or weather phenomenon is a better way of putting it. Nevertheless, we do that. So we link those things, and Fathom provides climate risk information for any climate scenario that you want with uncertainty. The other thing, however, that we do in our models, principally in things like our catastrophe models, is that we attempt to try and simulate the stochastic kind of uncertainty of the atmosphere anyway. So we try to simulate things like, well, we don't have many observations, but what we do is we try to generate a synthetic 10,000 year event set. So 10,000 years of plausible events, things that could occur. And when you do that, actually, the range of events that occur around the world is pretty vast, right? So, if you only looked at observations from the past 40 years, there's not that many really extreme events that occur. Right. If you have a 10,000 year event set, regardless of climate change, actually that range of events can generate some pretty huge losses around the world. So that's kind of two different ways of representing these things. Insurers often have relied on the stochastic understanding or a synthetic event set to understand what tail risk looks like. Often now what we see from regulators is that they actually want you to explicitly explore emission scenario risk, right? So what does my risk look like if we were to be in an RCP 8.5 world in 2050, for example? Our tools do both of those things, is really what I'm trying to say.
I mean, we've spoken about flood, and that flood as a peril seems to be, as a growing threat around the region. We're seeing more and more flood events, and both flash floods and riverine floods and all kind. Flash floods as a peril in itself is growing into a bigger risk, and sort of insurance penetration, as we know, as we always hear from insurers in the region, continues to be very low, and that sort of protection gap continues to widen in the region. How do you see, how can sort of better flood data and modeling help us close that flood protection gap? And how can governments, insurers, and technology players like Fathom solve for that problem?
I am definitely in danger of repeating myself, so I'll apologize and ask you to forgive me. But I do think it comes down to the requirement for better data and better models, right? That makes these risks more. It allows us to represent them in more accurate ways. We try and be transparent with how we build these models, but in that and in the environment in which these data exist, we need governments to play their role, right? We need governments to help close that protection gap. They should be improving how these data are shared, right? So the public are aware of the risks that exist. That in and of itself should drive demand. We also need governments in this new world where we have climate volatility and we have rapid urbanization that in fact is at least as kind of amplifies risk by at least as much as climate change, in truth, if not more, is what the evidence shows us. In that world, we need governments to share data. We need them to invest in things like defenses and adaptation. And we need them to support things like public-private insurance schemes for really high-risk areas in which without that, it's very difficult to provide insurance, right? So we need that. We also need insurers to have access to these models as well, for the reasons that I mentioned previously. We need insurers to have good information with which to price risk, because in an environment where they can price risk more accurately, they don't need to be conservative, right? The insurers need some way to effectively and accurately measure the risk with which they are exposed to. And that is really, again, and I apologize for repeating myself, but that's really where I think technology providers like Fathom has a big role to play, because we're the ones generating the information to do all of those tasks, right? And I think we really do, without sounding too grandiose, I think we have a real role to play here in making society as a whole more resilient to these new threats.
Just from a Fathom perspective, you focused on floods. Is that all you're focused on, or do you start looking at other perils around the world?
Well, generally we're focused on flood. Really, that's our core. Again, USP. I mean, early in the early days of the company, if I'm being truthful, yeah, we thought about it, right? Because people said, well, you do flood, why don't you do other things? But we kind of decided early on that, we're just going to, like, this problem is so big and difficult to tackle that it requires absolutely all of our attention. And what we'll do is instead of trying to provide an answer for everything, we'll try and provide a very good answer to this one very specific and growing problem. So we have around 60 people now only building flood models. So that's what we do. Nevertheless, some of the data that we produce to improve our flood models are useful beyond just flood, right? I mentioned the terrain data sets. So we have the world's best terrain data sets now. They can be used by other modelers, and they are indeed used by other modelers. We have explored and done work in areas like drought. So it's not too much of a surprise to say that the models set up to simulate flood processes are indeed useful for simulating low flow environments as well. So they've been used for things like mapping shipping route risk around the world. So what are the chances, for example, that you're not able to ship grain through the Midwest of the US or through South America? So they are used for those things as well. But as a whole and in general, we're focused on building better flood models. I'm really excited and actually amazed. Truthfully, I'm amazed by how much progress we've made from the early days of the company to now, because we have locally accurate flood models anywhere in the world. So we have made huge strides, but there's still a lot of work to do as well. So I don't think we should get complacent in that. We still have much work to do, and there will be even more exciting news in the near future.
Thank you, Andy. Thank you very much for your time and for your responses. It's been fantastic speaking to you.
Brilliant. And again, thank you so much for the time.
That's all from us in this episode of Between the Lines. We'll be back again in 2 weeks. In the meantime, you can connect with us on LinkedIn and make sure you're subscribed to our daily and weekly newsletters delivered straight to your inbox. And of course, we'd love to hear your feedback on the podcast. Email us at editorial@insuranceasianews.com. I'm Mithun Varkey. Thanks for listening.